Gold prices closing the week lower ahead of the big central bank meeting in Jackson Hole. So what's the best way for gold traders to play this market, especially with the Fed's mixed messages? Gary Wagner of the Gold Forecast joins us now. Gary, good to see you again.
Delighted to be here. Thank you very much.
So Gary, let's talk the Fed again. It's confusing markets as to when they will raise rates. How can investors profit on the Fed's inconsistent comments here, Gary?
Well, the underlying word I would have to say, or two words, is very carefully. Obviously, we saw what happened this week, or excuse me, last week when a jobs report came and the FOMC meeting minutes were released this week, we had a tremendous fall. The key when you're looking at any kind of either data or upcoming event is comparing expectations to actual statements or the data that comes out. Because the underlying tone of the market is to really factor in the current set of beliefs or sentiment. Right now, I believe the sentiment is about a 55% probability that we'll see a rate hike this year. If statements are made in Jackson, which kind of change that outlook a little bit, that's where you see the knee-jerk reaction.
So with the rate hike expectations rising here, Gary, some analysts are now calling for a correction in gold. Do you think this will happen? What's your take?
Anything is possible, first of all. But I think that what we have seen with the decline in prices this week was really factoring in the expectation of a rate hike this year. If that changes, in other words, that is now factored into the market. So if there's a basic change from sentiment because of statements, that's where you're going to see the reaction. But I think that a rate hike this year has been factored into the market. And if we don't have any more extreme news to that extent, I think we've already seen what we're going to see.
Okay, so since it's been priced in, you don't think we'll see volatility next week ahead of the meeting?
We certainly will get some volatility. We certainly could get a knee-jerk reaction. But in terms of the question whether gold's really going to sell off sharply, it would have to be a dramatic change in the sentiment that currently exists.
All right, so Gary, to wrap, that key level you're watching for gold.
Well, there's a couple of key levels. And most importantly is the most recent low that it hit, which is roughly around 1329. 1330 in that area. So support level needs to be held there. On the upside, since this market has begun to rally, we have had a series of higher lows as well as higher highs up till this last rally in which it just matched 1370. So the upside target we really want to see broken is around 1370, and it needs to hold 1330.
Gary, thanks so much for your thoughts.
My pleasure as always, and I want to wish all of our Chartist viewers most successful trading and investing next week. We'll talk to you real soon.
Thanks, Gary, and thank you for watching. We'll see you next week on Kicko's Gold Report.